together, and still, this is only. I mean, I'm going to tell you something. As far as things go, digital asset treasuries, I believe that this is in the beginning phases. You have crypto that just stepping out of the dugout. Stepping out of the dugout. It's like, Lou Gehrig stepping out of the dugout, hasn't even gone to the batter's box, hasn't even gone up to bat, just warming up, stretching out, and that's what's happening with crypto. And we're going to see more We're going to see more of this happening. But look, as far as digital asset treasuries are concerned, the trend reflects the growing institutional confidence. We're getting some regulatory clarity. This is why you have spot ETFs and things that are happening. You have the CME that's actually going, and they're going to start allowing for 24/7 crypto spot trading and options trading, the derivatives on that. Okay, so and there's an appetite for that, right? There's an appetite for that because if you can go on Coinbase and trade around the clock, if you can go on other cryptocurrency exchanges and trade around the clock, and why can't you do that on a TradFi market? Like, I mean, it just makes sense, and I think you're going to see a lot more of that happening. You have the New York Stock Exchange that said they're looking to tokenize stocks. Just imagine they're tokenizing stocks. So you're going to have the Robinhoods, the Coinbases, the Binances, and other, even decentralized, whether it be, Uniswap or PancakeSwap or HootDex. You're going to have at some point in time stocks trading on there. But also, what you're going to see is something interesting in the space that you're going to have the ability to have 24-hour trading. So that is going to be interesting. Now, I'm sliding back into digital asset treasury. Sorry, I'm bouncing around, but I have so many thoughts on this topic that I just can't hold it back. Actually, look, in the DAT space, who sparked it? MicroStrategy, which is now Strategy. They sparked that trend. No one can question that, debate it. No one can deny it. Michael Saylor figured it out. My God, he figured it out. But on a scale that no one even thought can be done. And going back to private equity, back in the 60s and 70s, as I said, private equity wasn't what it is today. Back then, you had companies going out there and they were going and being very ginger with how they were making these investments. Okay, where you had even, at that point, you had Goldman Sachs. They made an investment. I forget the name of the company, but they made an investment, and they invested like $2 million of the company's money, $2 million, and they were shaking in their boots, thinking that they were going to lose that $2 million. They didn't know what they were going to do. Okay, where now you're talking about billions and billions and billions of dollars in acquisition deals. You have KKR, Apollo, and Carlyle Group, and all these groups that are going and doing this stuff. But back in the 60s and 70s, it wasn't that maturing market. You had the likes of Henry Kravis, you had George Roberts, you had Kohlberg, you had the likes of Steven Schwarzman that came out. You had like Forsman Little. You had all these guys out there that were doing. They were working at other firms, so they were involved in private equity. They weren't allowed to do what they needed to do. So they went out on their own. That's where you have the KKRs. This is where you have the Blackstones of the world. They had a methodology that they wanted to implement, and you had Kravis, which was and Roberts and Kohlberg. They were all at Bear Stearns. They were all at Bear Stearns. They weren't allowed to do what they needed to do. Okay. On the other hand, you had Schwartzman. He was at Lehman Brothers. He couldn't do what he had to do. So when they branched out and did their own thing, the birth of KKR came about. They set the standard for how private equity works, and the deals started growing and growing. They went from 10 million, 20 million, 100 million, 150 million, 300 million, a half a billion, billions, and so on and so forth. They basically gave us some of the most amazing leverage buyout deals at the time. Okay, whether it be Beatrice, whether it be RJ Nabisco and the like, it was just a crazy time. And talking about the innovators in the space, you look at Schwartzman, okay, and Blackstone. Maybe people don't realize that Blackstone and Steve Schwartzman, allowed and created and gave the opportunity to Larry Fink to create BlackRock. BlackRock is a derivative of Blackstone. Stone and rock, you get it? The correlation. So basically, that's what allowed that to happen. Very smart people doing a lot of great things. And you had back then with the leveraged buyouts and private equity. What happened? How were they able to go and do these, $100 million deals, these $1 billion deals? How? Well, very smart guy basically created something called junk bonds, and that was Michael Milken. Yeah, something he shouldn't have did with a guy by the name of Ivan Boesky, and did that type of thing. However, he changed Wall Street finance forever. Not for a day, not for a year, not for a decade, forever. The 80s brought us that, changed everything. This is what allowed Henry Kravis